Hello everybody, and thank you for tuning in to the Liberty Report. With us today is Chris Rossini, our co-host. Chris, nice to have you with us today.
It's great to be with you, Dr. Paul.
Very good. We're going to talk about money today, and I wish it were that all we have to do is wave a wand and we'd have enough money to really have a great program. But that's not what this is all about. It's about money. And besides, great programs and great ideas aren't dependent on money. Matter of fact, it depends. If you're looking for distributing knowledge about it, you try to have an understanding about what money is all about. And we're going to talk a little bit about that because there's lots of cliches about money and the international finance. And I've enjoyed watching it. I often thought, wish this weren't so serious, because it's very entertaining about how the silly people who really run the money shows, and the fiat money and the manipulation and how Bretton Woods broke down and the fixed rates went to variable rates and floating currencies. And it's all very, very important and very, very sophisticated, and there's so many different financial instruments to do some predictions on which way to go with the investments. But lately, and it's been around forever, when people talk about trade balances, everybody wants a trade balance edge. They want to be able to sell more stuff than they have to buy, and that makes more money. So therefore, they don't just go and say, well, we have a stable currency. All we have to do is deal with a good product, and this will take care of things, and the consumers will buy. It doesn't work like that. They talk about currency competition, because they think that if you have a weaker currency, your products will be cheap and you'll get to sell more stuff. Or if you have a strong one, that's a benefit too. So this goes on, but it's always the manipulation. And Chris, I want to talk today a little bit about why we don't need that manipulation.
That's right, Dr. Paul. And even in our title, we talk about strong dollar, weak dollar, stable dollar. These are just code words for special interest dollar, because what is happening is special interests, politicians, the Federal Reserve, they manipulate the currency and the economy to serve certain special interests at the expense of everyone else. And in reality, prices are supposed to reflect supply and demand. They're supposed to give us the truth about the economic situation in front of us so that we could make good decisions. But instead, we live in a manipulated economy with a manipulated currency, so the prices lie to us. And as a result, people do foolish things, like buy stocks in companies that will never make money, drive their value of these companies into the stratosphere, or entering lotteries to buy houses in Florida that you'll never even see or step into, but you're only looking to flip. This is the environment that the Federal Reserve, by manipulating interest rates and currency, creates. And it creates a lot of heartache when the whole house of cards comes down. So we need the truth, truthful prices, a sound currency, and being able to see the situation as it is so that we can make good decisions.
Yes, and you're implying that there would be a market to help us sort that out. But unfortunately, that doesn't happen very often, especially in the last 50, 60 years. It's all been a manipulation, and even longer than that. Essentially, prices that we've had the Fed, and then we had the Bretton Woods and the breakdown of the Bretton Woods, so there's always the manipulation. So they talk about the advantages of maybe a weak currency or short-term benefit of a strong currency. I mean, if you just had to pick, you think, well, strong currency should be a lot better than a weak currency. That means you get a stronger purchasing power. But when you talk about trade, then they think that interferes with the trade, and some people don't like that, so they want to rig the system. And some people think, well, what you need is a stable currency, one that's rigid and you know exactly what it is. And I always want to think more about a definable currency. You know what it is. You know what the measuring rod is. That you can define it, and everybody knows what the definition is. But if you use the word stable, that means that it's going to be maybe rigid with other currency. Who's going to decide what is a stable currency when there's so many variables? So I think it's more important to think about a sound currency, a definable currency, and of course all currencies that originate in a market usually has something to identify as a measurement of value. And the things that have lasted the longest and easily definable were the precious metals, gold and silver, and they're still around. But it's something that right now there's no presence there. There's always the manipulation. Everybody, when the Fed comes out with a report, the people who doing the analysis for investment reason will compare it with the month before. And they'll look for maybe 2 words that have changed. And, oh yeah, he's hinting this is what he means. And all of a sudden the markets either go up or go down because of that. Well, that's pretty artificial and somewhat silly, because long term there are a lot of other factors that determine what's going on. So the big problem is we have fiat currencies. We've had them for a long time. And regulators, the Federal Reserve and Treasury and politicians, they all want to, smooth things over, because things don't work well when you have a fluctuating currencies with other currencies as well, and therefore they want to rig the exchange rate. And that's what Bretton Woods was all about. Rigging the prices artificially, how many dollars to the pound and this sort of thing. And that rigging of the exchange rates was never very good. They always cheated, and it always broke down. Then to have a readjustment, but it was a pretense that they knew what the ratio should be. So it was a major event when the Bretton Woods broke down, because then the market had to do it, and they had to do what they called floating rates. And in a way, that's a market function, because the market was going to help source this out, and it ironically made more sense than the politicians trying to design the regulation that said what the ratio should be, one currency to another. But it still was fiat, and it's still what it did. It gave the United States, it gave the dollar a lot more power, because people trusted it, and the dollar was related to the to gold all that time. After Bretton Woods, they established it, at $35 an ounce in the 30s, but they kept it there. After the war, we were so wealthy, and we were spared a lot of damage during the war. So, we were in a very strong position to grab hold of the control of the reserve currency. And of course we benefited by that, but what we're going through now is this recognition that the dollar no longer is going to be the reserve currency. But there's a lot of things the investment people go through. What do they look at to know? Because it does make a difference in trade. Because if the dollar is going to get a lot weaker, that sends a signal that maybe some products are going to be sold. But if the dollar is going up, and vice versa. So they look at that, but there's a lot of things they look at, because they're trained in Keynesian economics, that if you have all these factors and you put them into a computer and then you push a button and it tells you what's going to happen, what the price of things are going to be and what the condition will be like, which isn't true, but they're still very important, because a lot of people base their investments on some of these trends. For instance, the CPI, look how they hang on to CPI. CPI just went up. And the whole thing is it's a number that the government rigs. They can fix it, and they can fudge those numbers. PPI is the same, but overall it does have a thrust. They can't totally hide from it. Matter of fact, the best measurement of the CPI would be a housewife that has to go shopping, and she might be able to give you a better hint. These prices are going up, and there's inflation out there. So all these things are measured and important, and it encourages politicians and central banks to manipulate things in order to try to satisfy a political goal. And that's why ultimately they go to wage and price controls. And it can be total, but we have a bit of that going on all the time. I mean, wages aren't set by the marketplace, they're set by regulations, what the government tells us what to do. So it's always trying to cover the bases of not having a sound currency or a definition of a currency, and the disadvantages that are poured on some groups and the others are benefiting, and that's one of the big things we talk about. And also, the Marxists talk about it because they said, what's going on in this country today are people getting poorer, and the wealthy are benefiting by that, which is true, but it has nothing to do with freedom. It's in spite of, it's because we don't have freedom. It's because we don't have a sound currency, and yet it's being used right now as we look at what's happening today. That the far left and the Marxists, the socialists, all use this to say it's so unfair. Well, what they want you to do, and they're pretty good at this because the media, recites this thing all the time, and they go along with this because they've all been trained with the same economists in their universities, and that they think that this will be a way that we can measure things, but quite frankly, it doesn't work. And yet they look at so many of these things. For instance, if you have market rates of interest, it's very, very important, but we don't. But they're still important because they're, when interest rates are 0%, that has to send a powerful message, and that's not the market talking. So, but in the when in a free market, the interest rate is very, very valuable because it's pricing and telling us about savings and how energetic the people are to invest their money. But those statistics right now aren't as valuable as they could be in a free market. So they're always back to currencies. Well, it looks like we need a stronger currency this week, or it's too strong, too weak, so we want a weak currency. Basically, though, most countries want to have an artificial edge in trade, so they go and have a weaker currency, and that was the advantage that we had for years because we could manipulate the value of our currency as the managers of the reserve currency of the world. So there have been tremendous benefits for us, the fact that we got to create the reserve currency of the world. But I think hopefully our little discussion will get more people to think about, well, why is the currency so important, and what are they using, and what do we have to do to really change this? Because are they going to change it in Washington automatically and change policy so this corrects itself, or is it going to get worse until we see much worse times? I think the latter is what we'll see.
I agree, and what I'm about to say will complement that, Dr. Paul, because those who intervene, the Fed, politicians, and their corporate partners, it's a never-ending cycle of just constantly piling on more and more interventions. They're constantly fighting against symptoms, only concerned about the superficial in the moment. Just do it, get that immediate satisfaction, and they do not even think oftentimes about the consequences, both predictable, and that's what this show is about. When government moves, we will tell you the predictable consequences, but then you have all the unpredictable consequences that nobody can know ahead of time. And what happens with intervention in the economy is those consequences pile up faster and faster until they get out of control. And we know that wars can get out of control, cultural conflicts, they could get way out of control, even out of the control of the people who begin them. Inflation can get out of control. And even look at these vaccines. We don't know what to expect. Who knows what the consequences are going to be. So this is what the interveners do. They create fires everywhere until ultimately there are so many fires that everything turns into an inferno. And every move that they make is wrong and just makes things worse and worse, and they checkmate themselves. And finally, when the inferno burns itself out, we get back to the libertarian principle. You get back to the start. Everyone has individual liberty. You cannot micromanage the economy or human life. And unfortunately, people have to keep relearning this hard lesson over and over.
Yes, and you know, a lot of events aren't predictable. You know, if you talk about natural events, and then of course you have things like COVID, which was, people might argue, well, that was natural and we're reacting to that. But then you have to deal with the government. How's the government going to react to these things, and are they going to help these problems? So deciding the value of a currency, they have to say, well, this is probably going to happen, which is, and when you don't have the definition, I'll go back to the definition, there's no definition of the monetary unit. Which is the thing that we should have. We don't want rigidity of the relationship with it or with other currencies, but we want a rigid definition of what the unit of account is. And I keep thinking that if you don't have a good unit of account or a measuring rod of what we're dealing with, how could the engineers and the builders build skyscrapers if they have a measuring rod that changes all the time? And that's essentially what we're having in an economy. It's always changing. It's not accurate, and it distorts, you know, the activities and the reactions of the people. And then you invite the the decisions made by politicians, and the things get messed up until eventually the solution that they have been using for so long and they will continue to use is more regulations to straighten things out, more spending money, go to the Fed. And our system says just print more money. And if we just look back at this last year and a half of all that intervention, the crisis was the reaction to the COVID. And look at the money spent and anticipating that and interpreting what is happening and what's it going to do to the dollar. And then the other thing that is really interesting is if you get all these factors together and you have to make these judgments, actually a lot of the judgment is subjective, because there will be savers and spenders, investors and speculators, and they're all looking at this, and it is a subjective determination of what might happen, and it's really ruined by the fact that they can't define even what the money is. So fiat money and the decision to declare that our dollar would be total fiat in 1971 on August 15th is a big deal, was a big deal, and continues to be a big deal, because that means things would become chaotic. You say, some people say, well, no, things have been pretty good. A lot of people have had a lot of wealth developed since 1971, and that's true. But some had more wealth than they deserved, and some people had less wealth, and they didn't deserve that. And it's very shaky. But overall, you might say there's a lot been developed. But we also may have had a lot of wars since that time, fought because we have the currency like this. And then anticipating when a war starts, that has a big effect on the perception of the value of the dollar. You know, it's if you start a war, a little war, and they think it's not a big deal and it's going to help us on some in some investment area, but at the same time, what if the war lingers for 20 years and you spend trillions of dollars you hadn't anticipated? That's not calculable. And you say, well, that's foreign policy and that's welfare policy. Yes, it is, but it's the restraint actually can be dealt with a sound currency, because people shouldn't be allowed to do that without having the money to do it, instead of being able to create this money, the currency, the fiat money out of thin air and get away with this. And that is why it's so important that people be held to the rules of economics that say that you just can't pretend you're creating wealth. And what does it lead to? It leads to what we're facing today. A bubble that's about to burst. The debt is just totally out of control, and people are trying desperately to figure out how to do it. And you know, and this is a part of the motivation of what's going on in fiat currencies. Just think of how much activity has been in the fiat currency, and some people sincerely believe this is a solution to this problem, and others believe, well, The time hasn't gone long enough how well that's going to work out, but it's also representing, the difficulty people have and how difficult it will be to solve this problem, because there's a lot of malinvestment, there's too much debt, the debt will have to be paid for, and it should boil down to the fact that, well, maybe fiat currencies have to be better managed. We maybe should have a weaker currency. Maybe we should have a stronger currency. Maybe we should divvy up the currencies a little bit better. Maybe, all this other stuff. Instead of saying, maybe we ought to have honesty in money. And actually, it started early in the history of the world, thousands of years. They found out that one of the most honest things that could be used in commercial transactions would be to price things in a precious metal, and that actually opened up the doors away from bartering and really led to the expansion that so many of us continue to enjoy today.
Very good, Dr. Paul. I will finish up with the bottom line being that government should not intervene in the economy, which today is, it would shock most people. What do you mean, government? Of course they should. Well, I have a quote that will never go out of style, so I recommend our viewers keep this in mind, write it down, whatever you got to do, because you could use it for the rest of your life. It's from P.J. O'Rourke, and he said, quote, "When buying and selling are controlled by legislation, the first things to be bought and sold are the legislators." And that is the absolute truth. Because once government is allowed to intervene in the economy, the people with the bucks, the money, will say, oh, you mean politicians can write laws to force people to use my business, or to write laws that can squash my competition? They will rush in right away to buy those politicians. And that is who influences the politicians. And we see it over and over, every 4 years, 8 years, Americans complaining that the politicians said one thing, and once they got in, they did the exact opposite. Yes, because all you did was pull a lever in a booth. That's all you did. You didn't do anything else. Once they get into Washington, now the big game begins. And by the time they leave Washington, many of them are rich, multimillionaires, tens of millions. They're some of the richest people in society, so-called public servants. So government's role is to stay out of the economy, punish people that use force, that use fraud, that break contracts. But the moment they intervene into the economy, the big bucks are going to flow in and buy those politicians.
Very good, Chris. We talked a lot about things that the finance people, everybody looks at to try to find out what's going to happen in the economy and what will happen to inflation and all these things. So there are so many factors, and a lot of them are artificial and they're political, and they may help, but they're not the real answer. Now, there's two items that I think is worthwhile looking at, even though it's not the final answer, and that is the money supply. What is the Fed doing? The statistics are reasonably helpful in printing of the money. And the other day there was a hint by the Fed official that they might start tapering. Again, another attempt on that, and the markets didn't like that. And so what they do with the money supply and how fast they're going up, and if you look at the charts, they're skyrocketing. A rapidly accelerating money supply is a sign that things aren't under much control. And even though we have some inflation right now in prices, we don't have a whole lot. I mean, they admit to 3, 4, 5, 6, but it's coming and it's going to be a lot worse because these money supply figures are huge. So I think that's important. But the other thing that is not a magic to it, but it's been long lasting, and that is what the market places on the value of gold. What's the gold price? And I think that gives some information of what people are worried about, as far as future inflation goes. So those are two things that are helpful, but still, the government can still, the money supply, they'll always have control of that, but they can rig the gold price. Just think of how long, from 1933 1903 to 1975, they essentially held the price of gold at $35 an ounce, which is pretty amazing that we weren't allowed to own it. Actually, it started to change in '71. That all those years it was under control, but it was representing tremendous wealth in our country and some special features. And we had a lot of money in the bank, we had a lot of gold in the bank, but it was destined to get to the conclusion where we are today on lot. Even people in 1945, when Bretton Woods was set up, Henry Hazlitt said, can't work, it's not going to work. And it didn't work, it broke down in '71. So that is the thing that we have to contend with. But if we don't pay attention to that, we won't know what to do to correct it. But the other thing I want to suggest is, we talked about the weak dollar, the strong dollar, and also the stable dollar, and the shortcomings of those terms and how they mislead. And so the term I like to use is a sound dollar. I think the founders understood what a sound dollar was because they wrote into the Constitution that only gold and silver could be used as legal tender. So they knew a little bit about this history. They knew it. It's biblical history. It's ancient history. The whole history, the history of precious metals as money is not brand new. Now the history of cryptocurrencies, it's relatively new. And hopefully, yes, I'm all for competing currencies, and I've always been hopeful that it might, help solve this problem. But the history is rather new. But generally speaking, those who promote the cryptocurrencies are saying, well, it has the same features of gold. But only time in the market will finally determine that. Gold did not become money because of the government declaration. It was declared by individuals, people who were trading, and knew it was better to get away from bartering. The market will decide on what's going to happen. All the prices, you say, well, these prices have to be controlled. They're too high. It costs too much for the medicines and all this. You put on controls, doesn't work. It doesn't work because all you do is, if it's not at the market, if you're not lucky and you hit the market, it doesn't work. It causes shortages, and that's what happens. You see it on short term. If you have a hurricane and everybody runs and gets their gas tank, there's a shortage of gas and the prices go up. You can't control that. What you want is to increase the supply. So you cannot do that just by regulation. But I think the most important thing to do when you're talking about money is, if we work our way back to having a sound currency, we have to have a definition of the unit of account. We've had it in the past, but it doesn't make any sense right now. Nobody really cares. There's people in the marketplace that knows exactly, what it means to be able to define it, and that is what we need if we ever expect to have an active, healthy economy again. But the bottom line is, the most important thing we have is freedom. Having our liberty to do what we want with our own money and not be regulated through taxation and through inflation, and all these problems that we face, and all the corruption that have undermined our civil liberties with COVID. That's all those problems come from our lack of understanding and the willingness of the people to stand up and say, enough is enough, we want our freedom, we'll take care of ourselves, because we think the government is not doing a very good job. I do want to thank everybody for tuning in today to the Liberty Report. Please come back soon.